For our clients that own businesses, sometimes they'll ask the question, are there tax benefits to putting my children on the payroll? And there potentially are a number of tax benefits. It's a way to potentially shift income from the high income business owner down to the child that is in a much lower tax bracket. You might want to give them income so they can actually make Roth IRA contributions each year. If the company sponsors, let's say, a 401k plan, the child might be able to be given compensation and they can put up to $23,000 all Roth into that company's 401k plan every year and potentially get employer contributions. And there's a number of other strategies at play here. But we also, with that same tone saying there's advantages, there's also limitations and compliance restrictions that the business owner has to be aware of. And we're going to be going through those today. Hello, everyone. I am Michael Ruger. I am the managing partner of Greenbush Financial Group, and this is a fun tax topic to talk about when it comes to adding children to payroll, because there are definitely advantages, and we're going to cover those advantages in detail first before I then go over to the limitations and things business owners have to be careful of when they add their children to the payroll. The first advantage is the income shift, because if we have a business owner that's in the top federal tax bracket of 37% and they can pay their kids $10,000, $15,000, $25,000 through payroll while they have some payroll taxes that the company incurs for doing that, maybe the kids are in a 0% tax bracket or a 10% tax bracket, that from a family wealth generation standpoint, that could absolutely make sense. The second strategy is to add the kids to the payroll just so you can max out Roth IRA contributions for them each year, because in order to make a Roth IRA contribution, you have to have earned income. So if they put them on the payroll and they get $7,000 in W-2, that will then allow the parent to turn around and say, hey, we'll make a $7,000 Roth IRA contribution for the children each year. And since those Roths accumulate tax-free and are withdrawn tax-free, that's a big wealth accumulation snowball that you can start for the kids early on. And there's a next level to this Roth strategy for the kids, which is if your company is sponsoring a 401k plan and you can give the kids enough comp, they can technically in 2025 put $23,500 all Roth into a 401k plan. And if you think about doing that for a number of years and they built up $100,000 and then this thing starts compounding, it could be a tremendous tax-free nest egg you're building for the kids. But there's also caution here. So depending on how your plan is designed, normally if you are designed as a safe harbor plan, adding kids to the payroll and having them do just deferrals usually won't monkey with your testing too much. But if your 401k plan is not a safe harbor plan and the kids are getting big contributions to that 401k plan in the form of employee deferrals, it can rock the testing results. So you just have to be very careful of that before you go this route, to talk to your 401k provider to say, if I add my kids and if they're making big contributions to the 401k plan, is it going to impact the rest of the plan? So those are all the advantages. Now let's cross over and talk about some of the restrictions that these business owners need to be aware of. So we'll have these conversations with clients and they'll say, yep, I want to add my kid to payroll. I'm going to give them $40,000 in W-2 comp. And we'll start asking them some questions like, well, how old is the child? And they're like, oh, he's 6. I'm like, wait. You're going to pay a 6-year-old $40,000 a year? It's like, it has to be a reasonable amount of comp based on their age and based on the tasks that they're actually performing for the company. It's very tough to pass the sniff test if a 6-year-old is earning $40,000 in W-2. The other issue the age situation brings up is state labor laws. Sometimes children are not allowed to do certain type of jobs, or they can only work a certain number of hours. You just have to be aware of the child labor laws for your state. The next restriction is really just payroll compliance. So they're going to get a W-2. They're going to have to pay FICA tax. And if you have them, let's say, as an hourly wage, you just have to be careful, because if they're doing admin tasks and you have other admin employees, but you're paying your child $5,000 per hour for the work that they're doing, that could raise some red flags. If you're looking to enact the retirement plan strategy where the company sponsors a retirement plan and you want the child to be able to make contributions, you just have to look in advance about the eligibility requirements into your 401k or retirement plan. Sometimes there's a 2-year wait, or there's a number of hours they have to work before they become eligible. The children are not granted any exception to that. It's like any other employee. So if let's say you have a 1,000-hour requirement to become eligible for the 401k plan, your child might not reasonably be able to work 1,000 hours. So you added them to payroll only to find out they're never going to become eligible for your plan. And the final is really just audit risk. If you're audited, having young family members on the payroll can attract some attention and additional questions. So just having written job descriptions, having timesheets, tasks that they've completed to document that they're actually an employee of the company. While there can be clear tax advantages to business owners adding their kids to the payroll, it's very important to be aware of those limitations, compliance restrictions, and we always advise our clients to consult with their tax professional, retirement plan provider, investment advisor to make sure they're comfortable with the situation as well as it's going to operate the way the business owner intends before they actually add the children onto the payroll of the company. I hope this information was helpful. If you have any questions, please feel free to reach out to me at greenbushfinancial.com. Thank you.